Well, good morning, everyone, and thank you for joining us on our webinar today. We'll be hearing from Andy Cay, who is the head of Procure To Pay at RB. He'll be taking you through the journey they took to improve the controls that they had and also the visibility into their AP process. So let's just take a look at the speakers for today, and as I mentioned, we'll be hearing from Andy Cay, who's held a couple of roles at RB over the past 3.5 years. Firstly, as a procurement operations consultant, and now as the head of Procure To Pay. Prior to that, he's held a variety of roles, consulting on change management and implementation, and across shared services, for example. We'll also be hearing from Dan Kimpton from statementmatching.com, who will be taking you through how their solution has helped Andy and his team achieve the kind of results that they were looking for. And you do have the opportunity to ask questions throughout the webinar. You just need to add them into the chat box, which is in your GoToWebinar panel, which should be on the right-hand side of your screen now. So just type them in as they occur to you as we go through the webinar, and we'll address any questions that you have at the end of the webinar this morning. So with that, let me hand you now over to Andy. If I can hand over to you now, Andy.
Brilliant. Thank you, Ellen. So good morning, everyone. As Ellen said, I'm Andy Cay from RB. For those of you that don't know RB, I'll go through, if I can move the slides on, I'll go through a quick corporate overview of who we are and what we do. I'll then just touch a little bit on the business services group scope, which is the functional area that I sit within the organisation. And then we'll get into the meat of the session today in terms of vendor statement reconciliations and what we've been doing to drive the improvements in our controls during what's been quite a busy transformational time for us as an organisation across the board. So who we are at a glance, we're a FTSE 20 company headquartered in Slough in the UK. Our products are pretty much sold worldwide. I'm hopeful that most of you on the call will have some, if not all, somewhere within your homes. We've got in excess of 40,000 employees working for us globally. We have in excess of 50 factories, with more coming on stream at the moment. Millions of products sold every day, and nearly 13 billion in revenue based on our 2017 revenue figures. So what do we look to do as a company? So our vision is a world where people are healthier and live better. And the way we do that, what's our purpose, is to make a difference by giving people innovative solutions for healthier lives and happier homes. And healthier lives and homes I'll talk a bit more about as well in terms of part of the business problem that we faced as an organisation. So over the last nearly 200 years, the organisation has grown and changed shape significantly, and that's based on a number of acquisitions over the years, but also in order to drive the right portfolio, there have also been some divestments. So our French's food business, for example, was divested in 2017 to help us drive our focus towards moving to two specific focus business units. So that is a health focused business unit, but also a hygiene home focused business unit. And we commenced that formal restructuring in January of last year. We're a significant proportion of the way through the restructuring, but that was really one of the drivers for me looking at our controls and working with Dan and the statement matching team on how we could manage our vendor reconciliations. And I'll talk a bit more about that as we run through. So in terms of for us as a business services group, what is the scope in terms of what we cover as a functional area? So Procure To Pay, I'll go into a bit more detail in terms of what that is, and I head up that tower of the function. However, we also provide support for the worldwide organisation on Record to Report, so our finance and accounting side of the financial back office transactional elements. We also manage master data, so this is everything from finance, chart of accounts, cost center master data, and so on, through vendor master data, material master, and also transfer pricing for our internal resale model within our manufacturing and commercial entities. We also have a programs stream headed up by one of my colleagues, and this is looking at all of the programs that we run from a shared services point of view, from deploying our services to new markets, to taking on new scope of activities, and where we are impacted by global change programs, such as our move to two individual business units. And then finally, we have a finance tower, and our finance tower deal with our vendor relationship with our third-party service provider. They also deal with our cross-charging to our markets within RB internally. So a bit more on Procure to Pay and what do I manage within the tower that I'm leading. So the tower that I'm leading, first and foremost, we've got a help desk. So this is email and phone enabled help desk, which is available for both our internal RB employees where they have problems, but tends to be much more utilized by our external suppliers, ringing up for or emailing in for vendor statements to be reconciled, for invoice statuses where they're having problems chasing down purchase orders and those type of things. I also have a procurement operations team, so they support sourcing and contract management within our global procurement organization, as well as the wider business where some devolved procurement activity is delegated down to our individual business units themselves. We have scanning and invoice management, so taking in either hard copy invoices to a PO box, scanning them and getting them loaded into our workflows, or dealing with email PDF images mailed in and ensuring they get into the workflows as well. Invoice processing, we're a bit of a complex organization. You saw the slide showing our journey via acquisition to the company where we are today. We have an awful lot of JDE instances from an ERP perspective. We're also in the process of deploying SAP across the organization, which is another significant change program that we're on organizationally. So that's where our invoice processing is happening across a myriad of systems. We then manage the payments. And then finally, and what we're here to talk about today, is vendor statement reconciliations as one of our key financial controls from a P2P tower point of view. Just in terms of figures, whilst we sell our products worldwide, for me at the moment, from a shared services point of view, we are part way through deploying our services to the global organization. So at the moment, we're processing somewhere in the region of 650,000 supplier invoices a year, and we're operating today across 20 different countries. And going forwards, we're going to be looking to grow that scope, which again will link into one of the reasons that we're working with Dan and the team at the moment. So on to the vendor statement reconciliations themselves. What are the key challenges that we were facing as an organization, and what prompted me to start a dialogue with Dan and the team and work out if there was a way that we could manage our vendor statement reconciliations in a smarter way. As I mentioned at the beginning of the call, over the last 18 months, we've been going through a significant transformation within the organization to split into two distinct business units operating under RB PLC. So on the one hand, we have the health business unit focused on our health-related brands such as Enfamil, infant and child nutrition, baby milk, Lemsips, Nurofen, Mucinex in the US, and those types of brands. And then on the hygiene home part of the business is where we have our brands like Finish and Airwick, Vanish, those types of products that hopefully you're all familiar with. As part of splitting into two separate business units. One of our key financial controls to ensure that we have our liabilities correctly recorded in our books is that we typically would aim as a bare minimum to reconcile vendors that make up 80% of our spend within each of our individual entities globally. What that means when we separate into two separate business units is we are transferring some vendor relationships into a brand new business unit, some are remaining in the existing business unit, and some of those vendors will continue to supply goods or services to both of those business units going forwards. So the challenge that we have in that separation is, in theory, by creating a brand new entity, we are in essence overnight doubling the requirement for our vendor statement reconciliations in order to make sure that we have those liabilities correctly booked in our systems and we're reporting correctly. So the controls and the separation of the business units are two of the key elements that have caused us to have a problem, if you like, or an opportunity, I should really describe it as. In terms of some of the other elements associated with splitting into two separate business units, I was given the challenge that as we separate into two separate business units, we would keep a flat cost base. So for me at the time, running a manual process for reconciling vendor statements, in theory, that meant overnight I would need to double the workforce that I had that were managing the vendor statement reconciliations themselves, and that's clearly not conducive with remaining cost flat. And the other thing is, what we wanted to make sure that was both before and after the legal entity split within each of our countries we were supporting, we wanted to make sure that the invoicing process was working in a seamless way with our vendors. So we wanted to overlay some additional vendor statement reconciliation checks into that process so that we could make sure we organizationally were comfortable that our vendors were being well looked after, they knew where they should be sending their invoices, they had our new legal entities set up correctly, and down the line, we weren't going to end up with a significant backlog of problems. And I've deliberately, into the middle of this, put vendor relationships. And I don't mean that vendor relationships are a business problem by that. What I mean is that actually we wanted to make sure that our vendor relationships didn't become a business problem. And what I was really trying to mitigate through additional statement reconciliations and making sure that our vendors knew how to work with us, I wanted to reduce the risk of vendors not being paid and potentially either threatening or actually stopping supply either to our factories or into our commercial offices globally. So that was really the kind of problem that I was looking to solve, what I was faced with. I think it's probably not an uncommon business problem in terms of we want to be better controlled, we want to do more, and we want to do it for the same amount of money as we're spending today, if not try and get a cost reduction if we can. So that was the kind of catalyst for me speaking with my team internally and having a brainstorming session as to what were the opportunities for us to manage this business problem, keep the business running efficiently, maintain our vendor relationships, and maintain our current budgets. So what was our approach then? So following the brainstorming session, one of my current employees mentioned to me a tool that they had seen utilized in a previous organization they were working with, and it was a statement matching tool. They came to me, they talked to me about the concept, how it worked, and potentially what would it mean for us in terms of reducing the transactional burden of manually reconciling thousands of statements annually that we were doing fully manually at the time of the conversation that we had. So what I did was I reached out to Dan and the team to say that this was the challenge we were facing. we had demonstrations with Dan and the team. We looked at the tool, we looked at the efficiency saving that we felt implementing the tool could drive, and on the back of that, I wanted to move quickly with the solution. So on the back of seeing the tool and thinking it was the right thing for me, the key thing for me was making sure that I had the right sponsorship internally. So I have a good relationship with our finance director who looks after our corporate headquarters in Slough. So I met with him, I talked him through the tool and the process that I was looking to roll out. And he agreed that from a corporate headquarters perspective, he was comfortable that we piloted the solution with his entity, and we could get some feedback and work with his team proactively to identify where we had challenges before we looked for a wider rollout. So on the back of agreeing the pilot with the FD, we then got into what was in some respects easy, in some respects difficult, the contracting and the IT security assessment. So in the world of general data protection regulations, cyber security and all of the other bits and pieces, making sure that we, even for the pilot, we had the right contract in place to protect our data and our security, and making sure that that was all assessed and taken care of, was something that shouldn't be definitely not overlooked, and also from a timing perspective, making sure that there's that time built in, and I'll talk a bit more about that later on. Once we'd got the contract in place and we knew from an IT security perspective we were okay to run with the tool, we then needed to make sure we got our internal team trained so they knew how to operate the tool, how to deal with any issues that came up, and what was going to be the process that we would run alongside the tool. We then ran the pilot with our corporate headquarters entity, and on the back of that pilot, we identified some tweaks that we needed to make, both to the tool and the process. And on the back of those tweaks, we are now in the process of a wider rollout globally with the tool. So that's both increasing the scope of the reconciliations we're doing with our current entities, but also as we deploy to new markets and new entities, we're rolling out the tool to support our vendor statement reconciliations on an ongoing basis. So what were the challenges that we had internally with the tool? One of the issues that I mentioned previously was we are an organization that's grown by acquisition. We have multiple ERPs, and not only on multiple ERPs, we also have other workflows as well, some for specific markets, like we have an Aspen tool that we use in the US for receiving and managing invoices. So the challenge that we had was making sure that when we were reconciling statements for each entity, we were making sure that we were looking in each of the right systems, be it the ERP or the workflows, to make sure that we could call in the right status for each of the invoices, and we didn't end up missing anything. And the challenge that I had here internally was coordinating with our IT department. So it was super straightforward where we had global systems like SAP, for example. What became more of a challenge was Aspen in the US, for example, being managed by a local IT department on a different time zone, and trying to make sure that we coordinated everything in a consistent way to make sure that we had that full visibility of all of the data to reconcile the statements. So that was one of our key infrastructure challenges that we had. The other challenge, I wanted to go quickly. As soon as I had the finance director approval that we could pilot with him, I then, as quickly as I could, got into the contracting and the IT security assessments. From a legal perspective, working on the contract, that was actually relatively straightforward, quite painless, I would say, and we had that in place very quickly. What took a lot longer was our internal IT security assessments to make sure that there was a full evaluation of the tool done, full evaluation of how data was transferred from RB systems into the tool, and making sure that we were totally comfortable from that before we went ahead with transferring any data to kick off the pilot. So for me, it's just about, I underestimated the time that would take. And that was probably me wanting to challenge myself to deploy the tool quicker. Whereas actually what I should have done was consulted with the IT team up front about what is the realistic time frame to complete those security assessments. And could we dedicate someone from our internal IT department to help work with the statement matching team, who were great throughout the process and very proactive in answering the questions that were raised by the IT department. But it was really making sure that we had a dedicated point of contact who could help to speed us through that process. And the final challenge that I think is really important with any change in the organization, and again, I stupidly made the mistake of thinking that there would be no people impact here. And the reason I thought there was no people impact here was, as part of the efficiencies we were looking to drive from deploying the statement matching tool, it was not to drive out headcount. It was actually to allow our existing headcount to deploy to other areas of the vendor reconciliation process and allow us to increase our scope that we were covering. And what I failed to do at the beginning was give the team who were performing these statements a level of comfort that their roles were safe, that they were not going to end up without a role at the end of this. We were just going to remove some of the heavy transactional analysis that they were doing on the statements and move them into more having the dialogue with the vendors to obtain the statements in the first place, and then some follow-up where we had any output from the system with regards to mismatch, missing invoices, those bits and pieces. So whilst I, in my own mind, knew there was no impact to the team, actually I didn't communicate that quickly enough in the process. And it was only as we got through the process and I was facing some challenges around some of the adoption that I unpicked why we were facing the challenges with adoption. And it was the worry about the roles of the individuals. So making sure that those challenges around the people are factored in and thought about is something that I would say was a challenge for me, and something that I would definitely do differently going forwards. So in terms of next steps for me and where are we? So at the moment today with the tool, we're still in a process of feeding the tool manually with data from our underlying workflows and ERPs. And that clearly is not the most efficient process for operating. So what we are in the process of doing right now is automating those feeds so that on a daily basis, we're pushing our AP ledger information from our ERPs, we're pushing workflow status of invoices from our workflow tools to make sure that on an ongoing basis, we have that information available directly in the statement matching tool. And that will free up the effort that we're putting in to manually add that data on a daily basis. But it will also give us an opportunity to respond to some of our help desk queries that we get from vendors, where they are potentially asking for statuses on multiple invoices that we can then feed into the tool to provide a very quick update to those vendors. So there are other aspects that automating those data feeds will allow us to pick up through the process. I've mentioned increased penetration previously, so we are still splitting some of our legal entities. So as we split those legal entities, we will increase penetration by rolling the tool out to the new legal entities that are created. But we are also in the process of deploying shared services to further markets within the RB organization. And again, that will be a way that we increase our penetration of the tool as we move forwards. And then there are two other aspects that right now today, because we're still learning about the tool, we're learning about how to run the process alongside the tool. Going forwards, we will look at what access we provide to our internal finance teams that sit within our markets globally. So there are dashboards available in the tool, reports that the team can run. They can go and look at the individual reconciliations themselves. Right now, we are maintaining control of the tool within shared services. We're maintaining the reporting and the visibility that we're giving to the individual markets. But over time, I would like to again drive efficiency by moving that to a shared services model and allowing the teams themselves to access the tool and interrogate at their will with the dashboards and the reconciliations themselves. And then finally, and potentially there's always a little bit more complication when you're dealing with third parties, but there is an option that we can potentially invite the suppliers to upload their statements directly themselves to the tool. And again, that would drive even further efficiencies for us from an internal perspective, to give the suppliers access to the system, allow them to upload their statements, sorry, and they can then see the output of that reconciliation and where there are challenges that maybe they need to address with their internal RB contact, or maybe we need to send in invoices that are missing from our systems. So they're kind of the phase 2 activities that we're looking at in terms of how we drive the most value that we can from the investment in the tool itself. So before I hand over to Dan, I was just going to wrap up with the 3 key points that I would pull out from what I've talked about this morning. So first and foremost, I think for any program, and certainly for what we've done here within RB, I think securing senior sponsorship for the program or the pilot is super, super important to make sure that there's a champion within the organization who can support you, who can help unblock legal or IT challenges, and can also have a dialogue with their peers on a global basis if there are questions or challenges that are raised in a kind of wider rollout or deployment. So that senior sponsorship for me, super important. I've mentioned it at least a couple of times, I think. Allowing enough time for the IT security questions, and if you're automating the data feeds, any interface setup, making sure that that's not underestimated is super important. And for me, I definitely missed our original project timeline objective. So taking a step back, consulting more with the IT team up front to really understand how much time they need to complete their aspects of getting prepared for a pilot or a deployment. That for me is really, really important. And then finally, communicate. So this is about making sure that the people who may be impacted know what's going on. And it's making sure that actually the internal finance stakeholders within the organization know what we're doing, how we're supporting them, and how we're working in a much more controlled way going forwards through utilizing the tool itself. So that's it from me. I will hand over to Dan now from Statement Matching.
Thanks, Andy. Hi, everyone. My name's Daniel Kimpton, and I work for Statement Matching. And what I was planning to do just for 10 minutes was give you a little overview of the system. I've got a little presentation which has got some screenshots on, so I'll explain a little bit more about how it works. So, like Andy said, the whole idea of the system is to kind of automate the heavy lifting. Is to automate the reconciliation process. So that the accounts payable team only have the exceptions to manage, and that's kind of the key driver. And then when you identify exceptions and you need to follow up with the suppliers because you've got missing documents or you've got missed postings on the ledger that need to be fixed, the whole idea is to basically manage those exceptions to make sure that when you identify them, you actually go through and resolve them. And then the overall kind of the downstream benefits are if you identify errors on a timely basis and you resolve them, it means you're going to pay more suppliers on time. If you share the results of the reconciliation with suppliers, you can effectively tell them the status of all of their invoices, what the due dates for payment are. And by doing that, you should, reduce phone calls into your vendor help desk. You should get fewer duplicates, and it's kind of like a virtuous circle. Now, the way the application works is we get data in every day, from your ERP systems and any kind of add-on systems that you've got. So we've effectively got the same data as your accounts payable ledger. The nice thing about getting data every day is any statements that are in the system already, they get re-reconciled automatically. So from an accounts payable perspective, you're always looking at the most recent results. So the screen that I'm on at the moment is the dashboard. So this is where you would land. And then if I explain, you know, when the statements are reconciled, it gives kind of each statement a status. So if I start from the top where it says fully matched, this is showing that in my system, I've got statements where all of the documents on the statement are on your ERP system, and there are no errors. So what you would do with those ones is, first of all, you'd be very happy, you know, because there's no exceptions. But, you know, share the results with the supplier, because, you know, that is the information that they would normally be ringing you up for. Moving below, fully matched with data mismatches. So that means that you've got all of the invoices, but actually you've got some errors between the statement lines and the invoice lines. So if you look below where it says statement lines, I've got some examples where the amounts are different on your ERP system compared to the statement. I've got dates are different, invoice numbers are different. Invoices and credits are the wrong way round, you know, which is a really important one. So that's where you've got, you know, it might be a credit on the statement, but you put it on as an invoice, you know, that kind of thing. And then there's different ways to select your statements. So where I've got the $sign, for example, I can actually run a report to display all of the statements where you've got missing credits, because this is something that you might want to prioritize and go and follow up with the suppliers to make sure that you obtain those missing credits. So when you run the report, it gives you a list. It puts the highest value credit at the top of the list. And then when you drill in, this is what the reconciliation looks like. So I'll explain what you can see on here. It's fairly self-explanatory. You know, you can see that I've got the statement data on the left-hand side, and then I've got your ERP data on the right-hand side. And you can see, you know, everything matches up apart from the first line on the statement, which is a credit note. So that credit note is missing. So what you would typically do is you would contact the supplier. Now, you can contact the supplier from statement matching. So if I went to the email vendor function, the email from address would be, you know, one of your email addresses. So any replies come back to you. You can put in a nice message to the supplier. But basically, the supplier would get an email, and there would be basically a PDF report attached to the email. You can download this to Excel as well. You know, some customers prefer Excel because, you know, we like Excel in finance. But from a supplier's perspective, you know, I can see that where the document is missing, I'm telling the supplier that I need a copy. So please send me a copy of that missing document. And then, you know, I know the status of the documents on your ERP system. The descriptions that you see on the page here, you know, inquiry, posted, and so on, this can be anything you want. You know, it's configurable. But I've got the status of the documents, I've got the due dates for payment, and you can see that I've got one that's paid. So you can see there's a payment reference like they would see on a remittance, for example. So this is what the supplier would see. And then back on the system, what we always encourage people to do is you should add notes. You know, if you put an action on someone to do something like, you know, send me a missing credit, if you add notes in the system, let's say next month you get a new statement from the supplier and this credit is still on the statement, you'll be able to see, well, actually, you know, last month, if I look at this one, I can see there is a note in here. You know, I've already requested this credit once before. So it actually pulls the notes forward from previous months, which is useful. In a shared service center environment, you know, typically the way my customers are organized is, you know, they would be looking after certain legal entities. You might be doing supplier splits, for example. So you can see on my search page, I can select statements for different companies, you know, legal identities, and I can select different suppliers, you know, based on the alphabet, for example. And you can save your search so that you only ever look at the statements that you're responsible for. And then from here, if I run it, it gives me a list. And then on here, you can reorder the columns. You might want to sort them by statement value, you know, work on the big ones first kind of thing. But if I select one from this list, I'll show you the one at the bottom. So this is fully matched with data mismatches. And then if I select it, we get back on this screen. And there's about 500 invoices on this statement. And what you can do with the big ones is actually put a filter on to show you the ones that are in error, because they're the ones that you want to work on. So you would filter it. It then gives you a smaller list. And And I won't go through all of these, but you can see that it's actually highlighting. I've got some where the amounts are different. So you can see the first line. I've got an invoice for 105.78 on the statement, but it's on the ERP system with an extra one, so it's $1,000 higher. I've got a debit and credit the wrong way round, which is a really big problem, and then so on. But what you would end up doing is you would fix these on your ERP system, and then because we get a nightly file of changes, if you fix them on the ERP system, these will get re-reconciled and they'll turn green, provided that you fix them. And then my last example that I just wanted to show was where you've got documents on your system that are not on the statement. So we call them unpaid items missing on statement. So if I select one of those, you'll see that I've got another section at the bottom called unmatched ERP invoices. So this is showing me for this vendor, I've got an unpaid invoice on their account for 286.80. And then if you look up at the statement, you know, all of the invoices are after the date of the document. So, you know, this is a misposting. In this case, it's probably a duplicate. You know, I've got one for the same amount in March, one for the same amount in April. So this is probably a duplicate invoice. But these are obviously really important to go and, you know, and follow up. From a reporting perspective, I've got lots of sort of supplier-based reports. So a lot of my customers, you know, when they are looking at statements, they want to reconcile a certain list of statements every month. You know, they have like a critical supplier list. So you'll notice that I can run reports to make sure that I've got my statements from my critical suppliers, make sure the statuses have been set to complete, which means I've finished working on them. And then I can also select statements based on the type of error. So I can look at the statements with missing credits or missing invoices or debits and credits the wrong way round. So it just enables you to manage the exceptions, you know, in the way that you want. But there's lots of reporting on there. I'll show you what the supplier portal looks like quickly, this is a next step for RB, hopefully. So if you invite suppliers to the portal, they get a login and they land on a dashboard. They can look at their invoices. So this is a list of invoices on your ledger. They can see the statuses, they can see the due dates for payment and so on. They can also go to a payments page and it will show them the payments. And then if they click a payment, it will show them the invoices that are in that payment. So this is really useful for the supplier on the accounts receivable side, because again, this is what they'll be ringing up your vendor help desk to find out. And then if you can get suppliers to do it, obviously the great thing would be to get them to actually reconcile their own accounts. So you can actually give suppliers the ability to upload their own statements. And it's a really simple mapping exercise. You know, the system wants to know, you know, they can upload Excel and the system wants to know the invoice number, the invoice amount, the invoice date and so on. So they kind of map it in and then it gives them the reconciliation results. So this is what the vendor sees. And then actually the vendor can see, well, actually RB are missing some of my invoices there. You can see the 3 with the question mark. So the supplier would then go and, you know, send these invoices in because they want to get paid on time. But importantly, you can also see the results of this on your side. So you can actually see any errors that you need to follow up. So you can see I've got some issues where I've got currencies are incorrect, for example. So if I just move through here, I just wanted to explain as well, a lot of our customers, you know, RB mentioned it, we do this with everyone. We offer people a proof of concept. So we would build a live system. You can give me data for up to 10 suppliers, which you provide in Excel. You would give me the statements, and then we would set a system up for you. Do a training session, it generally takes about an hour, and then that's day 1 of your 4-week proof of concept. And we like to have a weekly call with you during that period to see how you're getting on, work through any issues, you know, show you parts of the system that you'll appreciate more when you've been working with it for a bit. But it gives you the opportunity to basically make sure that it works for your business, and it provides, you know, input for your business case as part of your due diligence. And how the pricing works, it's just a really simple 30-day rolling agreement. There's no minimum term, and you can cancel at any time with 30 days notice. There's a monthly subscription, which is a fixed cost, and that's based on the volume of invoices you process per annum. And then there is a monthly statement charge, which is variable based on the number of statements that you upload and whether they're in Excel, paper, or PDF, because there's different ways of processing those. So it's really simple pricing. There's no setup costs either. So I needed to whiz through that to keep within the time. So I think I just about am. So I'll hand back over to Ellen for questions.
Lovely. Thanks very much, Dan. And also thanks very much to Andy. Some very informative webinar and some great insights there into the changes that you've been through. And in fact, one of the questions that we've had is for you, Andy. And I think you may have answered it to some extent, but it's did you encounter much resistance to change from the team, and how did you counter that?
Yeah, thanks, Alan. So yes, we definitely did. The challenge I encountered in terms of resistance was from my team rather than our global finance team that we're supporting. The reality was I didn't give the team certainty of what the impact of the change meant for them. And the impact for them was not that they would be losing their jobs. The impact for them was they were going to lose some of the transactional activity they were doing and focus a bit more on vendor engagement and following up where we had items like the mismatches that Dan was talking about during his presentation. So actually for me, the way that I would alleviate that if I were to do this again would have been to clearly articulate to the team up front exactly what it meant for them and that they didn't need to have a worry about their role disappearing. And that was what led to some of the resistance to really kind of embracing the tool and putting as much volume through it as we could. And so the way I've addressed it now is given them that clarity, given them the certainty as to what it means for them, and also shared with them the roadmap for how we're going to increase the penetration both within the markets we're supporting today, but also for the future markets that we deploy to. So it's really that certainty that I think the individuals crave, and it was my failing at the beginning, but now I've got them on board. They know what the kind of impact is for them specifically.
Well, that, it sounds like a good plan going forward, so that you can then obviously bring the whole team with you, and I guess that goes back to the final point that you made about communicate, isn't it? It's important for the team to remember that, but it can be something which sort of falls along the wayside, to the side really if you're concentrating on other things. So another question as well is, did you think about engaging IT regarding rollout of it, and I guess the solution globally from the outset?
So the answer, yeah. So the answer is yes, and I did have some initial discussions with IT right at the beginning. The challenge that I faced was getting to the right contact within the IT organization. This was the first thing since I'd been with RB that was looking at rolling out a new piece of software, and actually that it was for me getting to the right person to have the right dialogue with was a little bit of a challenge from my side. So whilst I tried to engage IT at the beginning, it took a little bit of time to end up with the right people and having the right conversations. So again, with the speed that I tried to roll this out at, that was what gave me some of the challenges around doing more engagement and having a bit of a kind of slower burn deployment plan. So I think it goes a bit to the point I also made about the IT security assessment as well, and making sure that there is the right amount of time factored in for all of those activities, whether it's securing sponsorship from a senior sponsor within the organization, whether it's what you need to do from a legal standpoint. And obviously every organization has different thresholds for risk and for what requires global IT rubber stamping versus maybe being run as a local project and all of those bits and pieces. So it's difficult to give a one size fits all depending on the size and scale of the organizations that are looking at potentially implementing something like this.
Exactly. Okay, I mean, and for a lot of organisations, it'll be something fairly straightforward because they won't have the same kind of issues that you're facing. And another question for you, Andy. It's someone's asking, does the separation of the two business units lead to the separation of the single P2P function into two, one for each business unit? And if yes, what made it necessary to separate? So I guess I don't know if that's one that you want to answer here.
Yeah, no, I'm happy to answer that here. So the answer is yes. We do now have two separate shared services organisations. However, as part of the split of the business units, we're going through a transitional period and handing over various aspects to the shared services team. So in my team at the moment, I sit on the hygiene home part of the business, so within that business unit, and I have a colleague who I'm working hand in hand with on the in the health business unit, who is my equivalent, and is standing up those services from a health perspective.
Okay, thanks. And then there's another question which perhaps both you, Andy, and Dan might want to answer. It's how do you control multiple vendor statements in a month? And is it rolling forward prior reconciliation data available? So how do you control multiple vendor statements in a month?
So from my perspective, for the majority of our vendor statements, we have an annual plan to cover our minimum threshold requirement, and so we will have those scheduled in, and we will run the reconciliation as of, for example, the 30th of June. So we will run everything up until the 30th of June, and we'll reconcile to that point from a statement point of view. At present, we don't do any multiple reconciliations within RB within a single month. We do have some vendors that we will reconcile every month, but they're few and far between, because actually we find the value of reconciling every month isn't there. If you've got a good established P2P process with your vendors, then monthly is quite a significant overhead, and maybe some vendor education or looking at the process itself in terms of re-engineering the P2P process might be something that would allow you to step back and put in a kind of more, I say relaxed control, because actually the control can still be the same even if it's done on a kind of longer cycle time. But Dan, I don't know if you've got anything that you'd add with other clients and what they do in this space.
Yeah, I can add to that. So obviously when the statement first goes into the system, from a supplier, it'll obviously reconcile it at that point, or you can put a date in to reconcile it to a date. And then every day as we get new data into the system, obviously that statement will get re-reconciled and all the results will get updated. But if you get any new statements from the supplier in that month, then obviously you would then be by default looking at the new statement, because that's the most up-to-date, account statement from the supplier. But the system keeps all of the previously reconciled statements. So you're always looking at the most recent one by default, but it keeps a history and obviously pulls any notes forward from previous statements onto the new statement, if that makes sense. But most customers, they either do when they do the reconciliation, they follow up all the exceptions. They request the missing documents, they fix all the ERP errors, and then that's it. That's job done. I've got other customers where they upload them at the beginning of the month, follow up all the exceptions, and then they'll do another run through at the end of the month to make sure that the exceptions have actually been resolved. So they'll do a two-step process, and this would typically be with their key suppliers, because it makes sure that if the documents were missing, has the supplier actually sent them? No, they haven't. Request it again. So they do like a two-step process. But again, that's up to customers, depending on what they want the to be process to look like.
Okay. And then I think just finally, I think because we're just over a bit on time, a question just asking if we're not receiving statements from suppliers on time, is there a way that we can use this tool to control this or report on it?
Now, yeah, so what a lot of customers do as part of the take-on, if they've not been doing a lot of reconciliations before they have the tool, then they often do an exercise up front, and they'll send communication to suppliers, generally via email, to say, right, I want you to send your statement in. We're going to reconcile it. We're going to share the results. We want to improve payment on time, etc. There's a lot, they give the benefits to the supplier, and then you'll generally find that you will get suppliers sending those statements because you're going to do something with them. Now, we don't, that communication tends to come from the customer, from their own systems, because they've generally got that already set up rather than trying to replicate it on statement matching. And then the other way to answer that is if you've got critical suppliers, you can mark them up in the system, and then you can actually make sure that you get statements from all of those critical suppliers. So you would run the report and say, right, well, I've only got, I've got 20 suppliers there where I don't have a statement this month. Let's contact them. So there's different ways of doing it.
Okay, well, thanks, Dan. Okay, so we have had a couple of other questions in which we can address afterwards, and also about the slides, and those will be sent out to you along with the recording directly after the webinar this morning. But for now, thanks very much to Andy and to Dan, and we've had some comments in from people after the question just saying that great information and information on best-in-class practices. So obviously it's something which has hit the spot on a number of people on the webinar this morning. So thanks to you both for that, and thanks to you all for joining us this morning. I do hope that you enjoy the rest of your day. Many thanks.
Thanks, Ellen. Cheers. Bye.